All right, guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we have Martin Rimes from Hit the Mark Trading here to talk about short-term momentum trading, primarily using the CCI indicator. Mirrors Futures is sponsoring this webinar. They provided the introduction for me and Martin, so we're going to turn things over first to Bob at Mirrors Futures. He's going to do a very quick, very brief overview of Mirrors Futures. It'll take between 5 and 10 minutes, and we'll get any questions answered real quick about Mirrors, and then the bulk of the webinar will be handed over to Martin. As always, as you guys have questions, you can type them into the questions box. We'll do our best to get everyone's questions answered today. I also will be recording the webinar. It will be posted on BNT sometime tomorrow in the usual spot. And do me a favor, if you are watching the recording at a later date on YouTube, give us a thumbs up if you like it. If you're watching it on BMT, then fill out the feedback form right below the webinar. It helps me to know what to do next time. All right, guys, and with that, I am first turning things over to Bob at Mirrors Futures, and we'll get started. All right, Bob, you should have
Thanks,
control.
Mike. Just make sure you guys are seeing the intro slide.
Yep, we see it, man.
Perfect.
Thanks.
Thank you very much, Mike. The introduction is always appreciated, and we're always excited to be in your room. We're excited to be hosting the webinar for Martin Rimes, who we've worked with over the years. I just wanted to provide a brief introduction to Mirrors for those of you who are unfamiliar with our services, or even for those who are. We have some exciting stuff happening at Mirrors, and I would just want to make sure that everybody's aware of what we're currently offering and where we're headed. Just a brief overview. Mirrors Futures is an independent introducing broker, and what that means is that we're capable of working with pretty much any clearing firm that we choose to. What that means for you is we work with clearing firms that have sound reputations in the industry, known as conservative firms. Obviously, in this age of MF Global and PFG, there's always question out there, and certainly with the crisis in the EU, we've gotten a lot of questions about the safety of customer funds, and I just want to make sure that everybody out there knows that we do our best to make sure that we're making sound decisions in terms of the partners that we choose to work with, and that's why we're here with Mike and Martin, and we use that same diligence in choosing the clearing partners we work with. Their main function for your account with Mirrors is to approve the account in terms of compliance review. They are the ones that actually hold the funds in their segregated bank account. It's in your name. The funds are segregated out for your use. They perform the clearing function for the trades that you make at the end of the day, and they provide you with the daily, monthly, and year-end statements. Now, again, Mirrors Futures being the brokerage side of things, we focus on all the rest. And if you have any questions whatsoever, Mirrors Futures is always the one to get a hold of. We'll be able to help you with the technology, which we were excited to bring you in 2006, being Zenfire, which is the trading engine you use to receive market data and execute trades through a number of supported front-end platforms. And we also provide the risk management component as well, and that's something that Zenfire allows us to do. But again, we've gotten some really exciting things going on here at Mirrors, and one of those was the addition of R.J. O'Brien as one of the clearing partners that we work with. So I want to make sure everybody is aware that we now offer 3 clearing choices: Rosenthal Collins Group, Dorman Trading, and R.J. O'Brien. And RJO is really big name in the industry. They're probably the longest running clearing firm in the industry, and we're really excited to work with them. We introduced that relationship to the Big Mike's audience last month. Just like we're adding new clearing relationships, we're also focusing on bringing you resources for you to use. So we offer a free 30-day demo of real-time unfiltered tick data from Zenfire for use with any of the platforms that you see on this page. We just added Inside Edge Trader to the platform option, platform page, as you can see, and we're excited. You see we have a space there in the bottom right-hand corner. We're currently working on and developing the technology for bringing you Mirrors Trader, which will be a web-based platform that we also introduced to the Big Mike's audience last month. We're excited to be able to offer new technologies to you and just keep up to date with Mirrors Futures, what we've got going on our website. We'll also make sure to come back and introduce these news options as they become available specifically for the Big Mike's audience. In addition to being focused on technology and clearing relationships, we have a lot of other additional services that you may or may not know that we have. Trade assist programs, managed futures in full service brokerage. We're really excited about our managed programs. We've recently hired Dwayne Paul as our Director of Managed Futures, who has a very broad history in working with a lot of different CTAs in the industry. It's a great way to diversify against your overall portfolio that you have with stocks and bonds and mutual funds, and it is a way to have professionals work with your money in the futures arena. We provide daily technical analysis straight to your email box, something that you can sign up for on the Mirrors Futures website. And we also offer hosting solutions, whether you're looking for a dedicated virtual machine or dedicated co-location with a dedicated server. We have capabilities to meet the demands of all traders, whether it's a professional hedge firm or an individual. So just to recap, we're a brokerage firm that's focused on developing technology. One of the things that we offer through our support team is remote desktop support, so that if you are having issues with any of the platforms or just need some assistance in getting started, we'll be able to assist you remotely. On the website, we have additional training materials that'll help you get familiar with the platforms and understand how they can be used with the Zenfire technology. We also host live weekly webinars with great featured experts like Martin, and we're excited to have those each and every week for you. Again, feel free to register for a 30-day demo of Zenfire directly on our website. And if you do have any questions, never hesitate to get a hold of us. If you have any right now, I would be happy to address them.
Okay. Well, thank you very much, Bob. If anybody has questions, now's the time to ask. And that Mirrors Trader, that's something I'm looking forward to. I see a lot of people that want that web-based or mobile, tablet, phone, whatever product. And
right.
With yours being, HTML5, it looks pretty sharp. I was impressed.
Well, good. Yeah, and when we were here last month, we introduced the web browser-based version, but
right.
When we do release it, it will have full capabilities with dedicated apps for mobile. So we're really excited about bringing that to the forefront, in addition to just giving you the ability to log in remotely from anywhere.
Right.
It has some additional benefits like server-side OCOs
right.
that have been demanded by traders
Right.
for a very long time. So we're happy to be able to introduce those to the trading community.
Cool. All right, I see just a couple questions, and then we'll turn things over to Martin. Max is asking if you offer discounts for NinjaTrader.
Any platforms and leasing or purchasing any platforms is held directly with the third party. So NinjaTrader, multi-charts, any payments to a vendor, a software vendor like that, are going to go directly to them. Unfortunately, we don't have any leverage to offer you discounts there.
Okay. E-Mini is asking regarding the managed futures, are they tested and or rated by your company?
Yeah, in fact, oftentimes clearing firms will offer a large list of CTAs and managed programs that are available. What Dwayne does is actually go through and make sure that we're working with the right folks. Not only are all CTA programs audited by the NFA, but we want to do our due diligence and make sure that we're working with the right type of people and that the programs that we offer can work to develop a customized portfolio that meets the needs of anybody out there. So the programs that we've selected are finally selected with the finely toothed comb, and we're happy to be able to offer those. We have information on our website about all the programs that we do offer.
Okay. And for anybody that wants more information, the webinar that you did last month, if they just do a search on BMT or they go to the webinars section, I think that was pretty in-depth. Okay, looks like we have 2 or 3 more questions. We'll try to do them very quick and turn things over to Martin.
Sure.
David asks, where can we get more information on co-hosting?
Yeah, we also have a section on our website that deals with the virtual machines that we offer and co-location, so feel free to look under the technology section of our website. Okay. Also, if you do a search, we did a brief introduction to that in last month's webinar, but we are excited to be coming back into your room, Mike, in a couple months, along with the CEO of Zenfire, Pat Shaughnessy, who will help explain the solution a little bit more in depth at that time.
Right. And let's see, Brad's asking, how do we get data fees? I'm not sure I understand the question. How do data fees work with Mirrors?
Right. And Zenfire. Yeah, Brad had that question, and Dave also touched on that in his question. So Zenfire, the commissions work like this. There's no separate fees for data because Zenfire provides both market data and trade execution facilities. So Zenfire connects with a number of international exchanges as well as domestic in the U.S., including all CME exchanges, Eurex, the ICE exchange. Those fees are incorporated into the round-turn commission rates that you'll see through Mirrors.
Right. Okay, and I want to move on. So anybody that has other questions, if you would just do me a favor and contact Bob, you can do it via phone or email. It's right there on the screen. And then that way we can move on with the presentation from Martin. And Bob, like always, I appreciate you being here today and providing the introduction for Martin to come on.
Thank you, and same goes here, and thanks for having us.
Sure. Thanks, Bob. All right, guys, give me 1 second, and I'll be turning things over to Martin. Okay, Martin, you should now have the option to show your screen.
Are you seeing my screen, Mike?
Yeah, we see it, and I can hear you just fine.
Terrific. All right, let me, you're probably seeing the GoToMeeting thing. I need to minimize this, right?
Actually, it's automatically transparent. We don't see it.
Okay, good, good, good. All right, are we ready?
Good to go.
Are we ready?
Yes, good to go. Go ahead.
Okay, terrific. So listen, I want to thank you, Mike, for having me here, and I want to thank Bob at Mirrors Futures. I appreciate you sponsoring this, and I appreciate that I was asked to share some information today. So what I'm going to do is go into the presentation. I'm a trader. I do have this educational service, but mainly I'm a trader. So at the very end of my presentation, I'll talk about hit the mark trading. Also, at the end of the presentation, we're going to look at several charts of today's activity, okay? Several charts of today's activity. So hang on and you'll see everything that we're talking about, how it works, okay? Just before I begin, I want to say one thing about Mirrors. Probably back in 2008, a friend of mine was doing auto trading, and she would send her template, everything to Mirrors. And while she was, I don't know, getting the kids ready for school, the trading was going on, and she felt comfortable because someone at Mirrors was watching over that just to make sure that no haywire problems was going on. So have a lot of respect for Mirrors Futures. All right, let me get going here. Today's topics, we're going to review momentum trading. I want to talk about determining trend. We're going to use a price oscillator, CCI. I'm going to have examples and key points and survival rules, market correlations. I want to talk about that. And I've never really gone into market correlations in any public forum, so I'm doing this special for Big Mike's. And we're going to look at today's chart actions and questions and answers. I'll try to handle your questions as you mention them. But I get so involved in the presentation, it might be good to hold the questions to the end, but we'll play it by ear. Okay, one quick thing. We're all adults here. Trading financial instruments using contract stocks or options is extremely risky. Only trade with money you can afford to lose. Past results do not guarantee future results, okay? Please consult a licensed professional prior to trading using real money. And I'm real big on paper trading, regardless of your level of expertise. All right, briefly, just a little bit about me. I've been trading well over 20 years, 10 years a full-time trader. I taught the CCI as a moderator in an internet room, and I handled the stock room, actually, and spoke in front of live groups in Orlando and Las Vegas. I do coaching, and in 2008 is when I started an education service, mainly as a way to get the message out there in a very economical way. I've got all types of experience in stocks, options, bonds, Japanese bonds, I mean, almost everything. Copper, cotton, wheat, all the grains, metals, okay? I prefer currency futures over Forex, but everything I talk about can be used on Forex. Various indicators, experience, and extensive auto trading work. Now, what is momentum trading? Well, it's trading directionally, up or down, right? Riding the price wave rather than reacting to what might happen. And usually this is accompanied by a price oscillator. And we can do this on intraday or short-term trading, right? Holding a few days or weeks or even longer if it's a good trend. I like to talk about getting back to the basics because no one really talks about the basics as much as I think they should. We use a weekly chart to see the big picture, a daily chart for tactical entries. Alternatively, intraday, we're going to use a daily chart for our big picture and a shorter time frame chart for tactical entries, right? And in general, the more volatile the market, the smaller the time frame. Now, markets can only move three directions, pretty basic, up, down, or sideways. And if markets are sideways, we're really challenged here, which means it's imperative to find markets moving. This means if you are an E-mini futures trader, you really need to expand your horizon, okay? Because we will definitely get into periods of a tight sideways market. You'll be frustrated, and then you're suddenly going to see it's the wheat market or the corn market or soybean market going crazy, and you're missing all that, or the crude oil market. So this chart I like to put on only because I traded through this. So here's 2004, and I wonder if I know how to, let me get my little spotlight. What I want you to notice, this is the SPY, the tight range here, okay, the tight range. Let me move my thing so I can see. Okay. We're talking about a range from 108 to 116 for the entire year, okay? Weekly chart here. And a lot of the times, the moves would happen in the overnight session, and then you're just sitting there and nothing's going on. And then the next year, 2005, 2006, the range was 116 to 122 for the entire year. So we finally got a breakout in the second half of 2006, but my point is you must look at other instruments, right? If you have something that you love trading on the Russell 2000, it must be robust enough to work on anything, and that's critical for you, okay? Because I do believe we are definitely headed down the road to tighter and tighter markets, okay? But today we're here to talk about directional trading. Now, in keeping with the basics, we're going to bracket price with trend lines. That immediately frames the action. We're going to look at weekly, daily, and intraday charts. And what we understand is that price is just going to bang back and forth between these lines, okay? So suddenly, when we look at the price and we've got these lines drawn, oh, it just frames it for the mind. It's easier to see it. So now suddenly, if we see the line broken, boom, all right, we broke a trend line. Now this is a trade. This is our third year to enter this trade. We enter this trade every year. We're going to enter it next year too. It's one of the most basic trades you can enter, all right? And that is you enter the equity indexes just before Thanksgiving, and you run it. Well, how long do you run it? You run it until the new year. Okay, beautiful trade here. And we're going to do this next year. Understand trend lines, right? Support and resistance is so huge and yet so, I don't know, it's like they get no respect, like Rodney Dangerfield. You have to understand that price likes to touch these areas over and over and over again. That's an edge, okay? Now, we do use an oscillator. Oscillators derive their power from price movements, right? So for this reason, you really need to understand how to read the price action at support and resistance areas. The oscillator, all that does, it provides a trigger point for entry. A lot of times it's a feel-good factor for you. Tons of oscillators exist. I'm not here to badmouth any oscillator. In the beginning, when I was swing trading, I used slow stochastics, MACD, Williams percent R, RSI, and I could put another one on there, the Bollinger Band. So I had busy charts, right? And all you do is when they all line up, hey, take the trade. Well, at present, I've reduced all that to one indicator, right? Because through the countless thousands of hours of screen time, I realize in a moving market, everything works, right? Everything works. In a tight market, the oscillators lose their value. So in my desire to simplify, I have focused on the Commodity Channel Index, also called CCI. So let's have an understanding here. I don't care what you've looked at. In a strong momentum market, all price oscillators work. In a tight range market, all price oscillators lose their predictive value, okay? So this is so key, and I just don't see it mentioned enough. This is one more reason to monitor several markets looking for momentum. Okay? Now, what is the CCI? Well, it's a commodity channel index. Donald Lambert created this. I've met Mr. Lambert. And in a moving market, CCI is shown to lead price. Now, don't take my word for it. Check out John Murphy's take in his book, Technical Analysis of the Financial Markets. Now, this is one of the required textbooks for becoming a chartered market technician. All right? So all I want you to see, in his book, he gives maybe a page discussion of CCI. Here's the key point. Notice that the CCI turns before prices at the top and bottom. Wow. Seeing's believing, but this is in print. So you look here, okay, well, we crossed the 100. That was his rule, and gosh, we're going down. We crossed the minus 100 here, and gosh, we went up. Crossed it here, and gosh, we went up again. Now, it's a price oscillator. All you need to know is that we're comparing price with a simple moving average over a selected time frame. So Mr. Lambert suggested a 20-day period. Others have modified Lambert's suggestion for intraday using 14, 6, and a 5 period. And the old-timers have long used the 50-period CCI to watch longer-term trend. Now, how do you calculate this? Well, most software platforms have this completely automated, so you don't need to really worry about it. I'm going to show you the formula, but I don't want to spend much time on it. Okay? So if you want to learn more about the actual creation of the formula, just remember, your better charting packages already have this figured out. Okay? It's already in there. All you type in is the length, 20 or 14, whatever. Now, what's critical about CCI? Well, you need to know how to read that histogram, and I'm going to show you that. When we look at the charts, you're going to see a histogram, and the 0 line represents major support and resistance. The 100 and 150 lines, or minus 100, minus 150, well, that represents minor support and resistance. Okay? The CCI, no matter what time frame you're using, if I show daily charts, everything's applicable to an intraday chart. It's just that we switch to 14 CCI anytime the time frame is below 60 minutes. Okay? All right. Now, what else? We don't just use CCI, we use extensive use of floor pivots to launch and exit trades, okay? And also, I believe in trading the rush hour instead of sitting at your desk all day. This is really important. And the key is to keep your brain fresh instead of bored. Now, for a moment, don't really focus on the price here. This is the Russell 2000. And all I want to show you first is just the histogram. So down here, this line, the 0 line, this is major support and resistance. Okay? So in other words, when the CCI is above the 0 line, 5 to 6 bars, the CCI bias is for upward move. Okay? So if we're down 5 or 6 bars, the bias of CCI is down. 100 minus 100, this is minor support and resistance. Okay? Remember, Lambert said take them at 100. Well, we don't really use Mr. Lambert's rules. 150 and minus 150. Another form of minor support and resistance, and instrumental in perhaps taking profits. We'll cover that. And then we have extremes. Gosh, when we hit 200, we typically turn around. Okay? Minus 200 or 200. So this is the histogram, and I realize I've only got a short time to talk to you about this. You will not be able to just immediately apply this. You've got to study this, listen to the lecture again, and then practice, okay? So what do we do here? Well, first thing is we need to know where's the train going, right? Every morning, where's the train going? Now this is a 10-tick range bar chart, 10 range bar. That means every time a bar prints, the movement of that bar has been $100, okay? So on the CCI, the number one signal is the diagonal trend line break. So easy, visually easy, right? And we have some rules. I only want to start drawing the diagonal trend line at 150 or higher. So if I just adhere to that only, okay, just diagonal trend line break, boom, up goes price. Diagonal trend line break, well, okay, this is a dangerous area here. We'll talk about that. Over here, this is, this is pre-market overnight trade. Over here, if we look at our day starting, this is 9:30 start. So we see the market's been up in the pre-market, and we have diagonal trend line break, and boom, we're going to go up. Another one here, diagonal trend line break, and up we go. Let's look at the 512 tick. It doesn't matter what your time frame is. Market opens with this guy, diagonal trend line break, up we go. Diagonal trend line break, up we go. Okay? Diagonal trend line break, up. Diagonal trend line break, up. Diagonal trend line break, up. I mean, it's so simple. So simple. What's the other thing I use? Well, this is a moving average. I use a 34 exponential moving average. Okay? And the floor pivots, let me hold off on discussing the floor pivots. This is a 3-minute chart, and I first started trading on 3-minute, and I found more often than not I was late to the party. So I really prefer activity-based price bars. Okay, so here's the morning. We were up in the pre-market, and market opens up, and boom, they take it higher. What you're going to find out when you're looking at charts, especially day trading charts, is the floor pivots are really excellent predetermined exit points, okay? Because they're all in the big algorithmic programs. But let's first look at the diagonal trend line break. Diagonal trend line break, up. Diagonal trend line break, up. Okay? On and on. So understand that the diagonal trend line break is very powerful. All right? Auspicious. Start drawing from the plus or minus 150 line. If you cannot draw a diagonal trend line break, do you really want to take the trade? Okay? So let's look at the ES. All right? So the first thing you do is what I do. I always like to know where is the what is price doing? And so I like to draw my line here, okay? I like to draw it, and I like to extend it out. And when I see tightness in the market, I'm relaxed. I let price resolve the issue, right? And that means breaking above the resistance, because otherwise you're going to get chopped up big time. Okay? So diagonal trend line break calls the trade, and up we go. Okay? Now this is another trade that I do, but I've got lectures on it through Trader Kingdom on the internet, and maybe I can talk about this in another session. But this is a pattern that Wells Wilder introduced in 1971 on the RSI. Basically, it's we go down, we come up, fail to go higher, we come back down, fail to make this low, and then we draw our trigger line, and we expect to move up. The beauty of using the moving average, and I use 34 exponential moving average, the beauty of using this is it just seems to be a great trend indicator. That's why I measure the trend up here. Okay, I measure this. If you use the 20, no problem. If you use the 50, no problem. I'm not here to tell you what to do. I'm just telling you what works for me here. Okay. This is the ES 10-tick range bar chart. Okay. So, and that's basically what I use now. I've used volume charts, tick charts, but I like the range bars. All right, so this vertical line here, this is the 9:30 time. Okay, so I see that the market opens at 9:30. Well, I would have my line drawn down here. Let's see if I can do that. Okay, just like that. And what I'm waiting for is if I see this setting up, then the first thing I'm looking at is probably an expectation we're going to go to this 34 MA. And then what tends to happen is price will shoot up. If it's going to be a good move, it'll shoot up and come back and retest 34 MA. Okay? And here's my diagonal with the trend line break. Well, you see it here. I'm not that good of an artist. And so, boom, take the trade. Diagonal trend line break, up. Diagonal trend line break, up. Let's move on. Whoa, doesn't that help? Now we really frame the action. Anytime you can draw, and you've got 3 touches. 1, 2, 3. Man, I draw that line, I extend it out because I know it's going to be retouched more often than not. So over here, I draw it out. See how many times I can start drawing it over here, and I just extend it out. This is a trading edge. You don't realize it. It's a trading edge, right? So diagonal trend line break, called the move up. Sweet. Where did we stop? Floor pivot. If we come down, I think we're going to go here, right? The moving average. That's what price does. Here's the daily ES. So the daily chart, diagonal trend line break, we called this trade. Diagonal trend line break, and up we go, and here's our expectation. Well, as you know, let's see, this is February 28th, I guess. As you know, we hit this level. Seems simple, doesn't it? All right, let's go back. Diagonal trend line break and up. Well, who's trading on December 31, right? And then here's the first day of the new year, right? But the CCI called the trade. Remember, we were in way over here. Why? Because every single year, I don't care what the year is, I don't care if it was 2008, it is ingrained. It's a paradigm. We're going to run the market up. That's it. And they do it every single year. All right. I'm going to get into some of the daily charts here, but the key point to remember is draw your trend lines at plus or minus 150. Better trades are in markets showing momentum, right? The 20-period CCI is for daily and weekly use and monthly charts. I look at the monthly charts once a month. That's it. I look at the weekly once a week. I look at the daily every single day. 14-period CCI for intraday, below 60 minutes. And you can use 5 or 6 period if you want to try this. I found it was just too busy. Too busy if you want to look at this as an early predictor. All right, let me just remind you that you've got to practice. If this is your first exposure, let me be honest with you. I took 1 year when I first learned CCI, and every single day, at the end of the day, even though I had looked at the charts for 6 hours, I printed the chart off, and I had dinner, and then later on, I took pencil and ruler to prove to myself that the CCI really worked. And that's why I'm such a believer in it. Let me just jump to the today's charts. Okay, so let me just make one little sound check here. Everyone hears me correctly, right?
Yes, you sound good.
Okay, terrific. Thank you, Mike. All right, so here's the daily chart, daily ES. Now, this is the exact same chart that I'm showing, you know, every night when I do my nightly video. So, you know, we came down. Where did we drop to? A moving average. Okay? This is a big deal for us because the trend is so strong, and yes, I measure the trend. The trend is so strong, and we knew that typically we get some kind of a pullback in February, so we were ready for this. Absolutely. And then suddenly you get the diagonal trend line break. Well, okay, the alarms go off, right? Better go long. So let me just show you something here. I gotta change my deal here. Hang on. Normal. Okay. So here's that pullback. This is IBM. And we got into this trade. And of course, now, I hope you can see this because, you know, if a trade immediately goes my direction on the first shot, I almost think something's wrong and I got to pinch myself. The minute we got into the trade, the thing goes against us. So we decided to wait one more day, just one more day, because we felt like the 34 EMA, the trend was good, and we were going to believe that this would act as our, you know, kind of our protective stop, right? So we wanted to just give this one more day, and then boom, up it goes, okay? So this is a great trade, okay? Absolutely. And we use options instead of buying the stop. So again, this trade was called in advance. Let me show you something else. Now, when I talk to you about the correlations, that's going to probably be the best part of the presentation for a lot of you. It's going to really open your eyes, I think. It did for me. So here's McDonald's, and gosh, we got in here, and we entered this on the 20. I guess we entered this on the 22nd. We talked about it here. All right, now diagonal trend line break. And instead of doing a spread, I used to buy the call, it was so cheap. I got distracted earlier in the morning, so while students got in better than I did, I got in at $2. Well, shoot, look at this trade. So the trade's up over 100%. Okay? And then when you see this over here, 1 second. When you see this, then the word goes out, hey, we have another, if you're not in the trade, you have another opportunity. Get in the trade. Boom. Okay? All right. Let's see what else. Let me go to today's intraday action. Okay? Let me do that. All right. I'm going to slowly do this. Okay. This is what I look at. I love it. The Euro, the ES, and my bread and butter, the Russell 2000. Okay? Now, the ES is the boss. Absolutely, without a doubt. Absolutely. In fact, let me just talk about that correlation real quick because I get into that. I hope you see, as I explained today's action, the benefits of keeping the trading simple. So let me just remind you, and I'll get back to the charts. I'm using support and resistance trend lines, moving average, CCI, and floor pivots. That's it. Simple, simple, simple. Now let's talk about correlations because this could very well change your trading for the better. You have to understand that in the 21st century, in the advent and popularity of the high-frequency trading, the ES is the boss, okay? The ES is the boss. Whatever the ES is doing, the ES is like a dog walker, okay? And you got a dog that runs fast in front of the dog walker, and you got a dog that might be struggling but walking behind the dog walker. But the main point is, if the ES turns, if the boss turns, well then everyone follows more often than not. More often than not. Now, what we find in trading is that we have a market anchor. So the market anchor now is the euro. That's why I watch the euro. Years before, it was crude, and the financial press would talk about, oh, crude is the alternative currency. At this point in time, the euro is the anchor. So if you're going to trade the ES, the Russell 2000, Dow Jones Industrial Average, or the QM, or almost anything, if you're a day trader, you need to watch the euro. Okay? If you're a Russell 2000 trader, you got to watch the euro and the ES. You understand that? Big time. Big time. What typically happens is we get a move in the 8 a.m. hour for the euro. Typically, now that doesn't mean 100%, but we typically see a move in the euro at 8 a.m. in that hour. Guess what? That means the ES should move too. Why is that? Because the trading programs are set up that way. We do not have to know the exact methods these guys use. What we need to do is have an ability to read the footprints. That's what we do. So if the ES moves, so too will other stock index futures. How did I find this out? This is all driven in my head with exposure to auto trading. And that opens up an entire world, new world of understanding day trading. Absolutely. And what we find more often than not is we can trade the rush hour on the stock indexes. Trade the rush hours. I have made money in the morning, and you know, $700 in the morning, and you think, wow, I'm going to take it to $1,000, baby. And then all of a sudden, I end up in the hole because I traded the entire day. So the key is, and again, the auto trading, you find out the sweet spot, right? We have a rush hour from 9:30 in the morning to 11. And then there's a second rush hour, right? Just like traffic in Chicago. Hey, I used to drive that. And by golly, if you were not out by 2:30, you were there for the duration. So the second rush hour, more often than not, is 2:30, right? Now that 2:30 might happen at 2:20. It might happen at 2:40. It might happen right at 2:30. So I suggest that you trade the first hour and a half, take a break, and if you must come back, then trade the rush hour. Okay? Now, obviously, we're going to have some days where, oh, it's just a big, huge day moving, and if you left at 11 o'clock, well, you missed some stuff, right? Well, that's going to happen. Don't worry about it. All right. People underestimate how the brain must be fresh. Now, as you learn to watch the euro, you need to realize the effect it has on other markets, including grains, metals, energies, softs. Anytime the equity indexes are trading tight sideways as judged from a daily chart, you really must check out the other instruments. You can day trade wheat, you can day trade silver, you can day trade soybeans, you can day trade crude. My very first day trading was cocoa on a 15-minute chart, right? Didn't know what I was doing. The chart was even delayed. It was a free chart. But that was my very first cocoa. Why? Because that thing moves. All right. I wouldn't trade cocoa now that I know better. Now, many contracts are available. What's the line here? Well, what's the euro? Okay. Now, many times the first 15 minutes of U.S. trading is a killing field for equity index traders. Just be aware. Sometimes, hey, the market just goes right off the bat, just like a rocket, right? But more often than not, the market's up in the pre-market, and right at the open, the professionals fade it. They fade the open. And who are they trying to get? People like you and me, retail people, right? And then as soon as they wash people out, boom, they continue the trend that was established in the pre-market. Just watch that. I don't know if you trade bonds, but do not trade bonds on an economic report announcement or a bond auction. Just know in advance and don't trade during these periods, or you may have your head handed to you. The key with economic reports is expecting a market knee-jerk reaction and follow that by a reaction to the action, okay? Let me get into the intraday charts here. Hold on a second. All right. Now, so many times you think that everything in intraday is just random, right? Well, when we use floor pivots, we find that it's not random. There is a method to the madness. And what happens intraday is typically movement between floor pivots. Why is that? It's because when the floor trader sat in front of the software engineer said, well, what do you do? How do you trade? And the floor trader explained this. Well, I come in, the first thing I do is I calculate floor pivots, and I just trade between the floor pivots. So they have written this into the algorithms. We see it over and over and over and over again. You must understand the floor pivots if you are going to be a successful day trader, in my opinion. So, let's look at the ES. If you don't have range bars, you can check out the 3200 tick chart, okay? Or maybe the 11,000 volume chart, okay? All right, so the first thing I'm going to do is I want to know, well, what's going on in the overnight? And I see this trading range. So the first thing I say is I must let price resolve the issue, because they don't know what they want to do. And so many times they wait for the U.S. market to open. Who's they? the other people trading in Asia and over in Europe. And you know, I have a saying, if the ES is up, everybody's up. So that means if the ES is up, you're going to see the Stocks 50 up. You're going to see the DAX up. Okay? You're going to see the FTSE 100 up. Why is that? Because the ES is the boss. Why? Because of the trading, the algorithmic trading. They have attached to the ES. All right. So diagonal trend line break, right? And up we go. This is 9:30 in the morning. No, I'm sorry. This is here we are. 7. Okay. This is 9:30 right here. This is the first price bar right here. I better mark that. Marking the price bar. Let's see. Where did I say it was? Hang on. Okay. Right here. So you can see the market was up, leading up into the pre-market, U.S. market open, and boom, they faded. Typical, 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 typical. All right, so it kept going. Well, where's it going to go? To a floor pivot. Why? Because it always does. Because it's programmed. Now, when we get to the floor pivot, anytime price is at a floor pivot, there's usually going to be a little consolidation. Okay? Well, here's your diagonal trendline break. Right here. Right where this line is that I've got the vertical dotted line. This tells you to go short, right? So you're going to go short, and your stop is best at the top of this trigger bar. And then if the thing starts moving in your direction, then you lower to a break-even point. As you see price fall, you already know where it's going to go. Now this is a very interesting price bar here. Okay? Because you know we touched the pivot exactly. And orders were already in there immediately. Fade the pivot. This is why such an abrupt move up. This is always a great place to take a profit. Okay? We move up, and here's diagonal trend line break. Whoops. Come on. And down we go. Okay? Come to the floor pivot. Congestion. This is another pattern. This is that failure swing pattern right here. But we had the diagonal trend line break. That's what I'm really teaching today. And so I've got a diagonal trend line break, and I've got price rejecting a floor pivot. So my profit expectation is not really here. My profit expectation is the moving average. If I have a runner, then I expect we're going to go here, right? But at this point, trend is so strong down, I'm thinking touch and drop. Okay? So you can tighten up your stops. You can just say, no, I'm going to take profit here. You can take some off. You can use a runner, right? Or you can just say, you know what? I think this is it. Gosh, I got another signal here to go along. Okay. All right. Let's look at another one. Here's the euro. Why did this fall today? Why? I mean, gosh. Housing starts were positive. Well, this fell because the euro fell, right? Let me get my times on here. Okay. So I send an email out every single morning to clients, and I said, you know, we just didn't get an 8 o'clock move, right? This was the business over here. All this sideways action here, okay? The entire night. So what I'm going to do is I'm going to have my line drawn here on price, and I'm going to bracket this because I know price needs to resolve the issue. I am not smart enough, okay? I want price to show me what's going on. All right, so all of a sudden, oh, I always expect to move in the 10 o'clock hour. I know I said trade 9:30 to 11. That's when you watch the chart. Conservative traders will wait till the 10 o'clock hour. It's almost guaranteed to see a move at 10 o'clock. So here we go, 10:22, boom, we're falling. Okay, I see that. Let's see over here. This price bar is 10:23. Boom, we're falling. All right? The euro is the anchor. ES is the boss. How about the Russell 2000? You know what I did? I put the Russell, the NQ, and the YM, and the ES all on the same chart. And that's when this hit me. My gosh. These guys turn within a minute of each other. That changed my trading. All right, so this is the Russell 2000. This is, let's see here. You can see that I already had the price outlined. It just helps me to, you know, I have a cup of coffee and I'm just trying to wake up. So I got to make things real clear for myself, okay? And I'm saying, okay, well, you know, chances are we're just going to bang in here. And I want price to resolve the issue, okay? Well, this was a nice trade, sure. But as long as I can draw 3 of these, I just extend it out. And suddenly, here we go. This is 10 o'clock, and this is 10:23. So you saw the euro turn, you saw the ES, and here's the Russell 2000 turning. Okay? And then we go where? Where are we going? Floor pivot. Uh-oh, diagonal trend line break. Up to 34 MA. By the way, here was your CCI trigger on this diagonal trend line break right here. Okay? Say go short. Here's the failure swing. Maybe Mike will let me come back and talk about that. I have a rule on the failure swing when not to take those things. Let's just look at the diagonal trend line break though. So we come to the moving average. It can be used as a protective stop. And boom, we go down. Now this is, what time is this? This is 11:31. Well, what is going on with the ES? 11:31. Oh, okay. This is 11:38. This right here. This is 11:38 when the price bar finally finished, so it started earlier. So ES decides to go down, okay? And that takes the Russell 2000 down, okay? Where are we going? To a floor pivot, right? If you just take profits at the floor pivots, gosh, I think you're going to do quite well. The main thing is, get it in your mind that this is not just random. So, touch the floor pivot, immediately what happened? Well, there's orders waiting. Hey, when we started falling, there were orders already lined up. Fade the pivot. This is what they do. Fade the pivot. Where are we going? Close to the moving average and down. All right, and on it goes. Let's look at something else. Let's look at something else. How about crude oil? Boy, like a gift. I love that. Immediately my eyes can just figure this out. Now before I drew this like this line was up here like this, right? And what we know about these channels is that, gosh, price loves to bang back and forth, bang back and forth. Okay? And if we ever re-enter, it's an event. So then when we get down this, I move the, start of a new day, I check it out, and I will move it. So it's probably first here and then here. Because I know this thing's going to be retested. It always is. Diagonal trend line break. 10:15. What? 10 o'clock move on Monday. Up we go. Okay? Up we go. And I like to draw these pullback lines. So diagonal trend line break. 10 o'clock move is up. This tells me the euro was headed up at that time. I don't even have to look at it. We come up here to the top. Good place to take profits. How do I know? Well, it just seems to be where price likes to go. Nothing very quantitative about this. This is a discretionary trader, right? Diagonal trend line break. Down we go. Now people always say, you know what? You draw these diagonal trend lines and it's easy in hindsight. Well, quite frankly, I don't know any other way to teach it, right? This is to get you interested so that you can start on your own to investigate this. That's the goal here. Okay? But I keep the charts all marked up. All right, and sometimes you're going to get action like this. Let me show you this. Whoops. Come here, please. Cooperate. Okay. Sometimes you're going to have something like this. We broke the diagonal trend line, right? But the price kept going up. Well, this is why I measure the angle up here, okay? I measure this up here. This is a big filter for me. In other words, if this is a super freight train, that's what I call it, that's my technical language here, super freight train, I do not want to get in front of the freight train. I want to ride the freight train. Okay? Now, it takes time to know when to discern those type of moves. These are nuances. You're not going to get this immediately. They're nuances. But you can learn to take a holistic approach. All right? That's what this is all about. And, of course, you're watching what's the euro doing. Okay? All right, so this is today. Let me just get where I can see the... All right, this is 9:30 in the morning. All right, so I think I had this guy over here like this. All right, so we're coming off of a channel line. This is numero uno for me, okay? This is a big deal. Big deal. And I got the diagonal trend line break. Chances are the euro's going down. And where am I going? Well, I'm going to the floor pivot and 34 EMA. And then as we get, close to here, I'm either taking profit or tightening stop, and boom, we go, where do we go? To a floor pivot. What you're going to find in floor pivots is in the daytime, in the intraday trading, more often than not, R2 and S2 will hold the move like a brick wall. If it escapes, then S3 or R3 holds the move. People want to know, well, what formula do you use? There's many different floor pivots. You use what the floor traders use. And I don't look at the people who have tweaked them, because I've got evidence that these things work so well just using what the floor traders always used. So don't worry about splitting hairs, please. All right, let me move on. I think I've got another chart for you, and then we're going to open this thing up for questions. Let's go to some stocks. Now, I'm using the 5-minute because on this charting package for stocks, I don't get the range bar data. What I want to draw your attention to is this little guy right here. Hang on. This little guy right here. Okay? This is important. First off, ISRG, this is a company that does those robotic surgery. Not that you need to know that. All you need is a stock that has momentum. So when we go down, where are we going? To a floor pivot. Why this reversal? Well, let me see. Hold on. Let's investigate this. This is 12:20, lunchtime. This is 12:20, lunchtime. ES is up, everybody's up. Got it? That's the way it works, man. All right, let's roll on. Oh, where am I now? How on earth do you trade a stock intraday? $482 stock. You do it with options. Okay? Diagonal trend line break, up. Now, notice I did not have any signal except this little tiny thing right here. Right here. This is a failure swing. So you really have to, again, be holistic here and understand, well, price hit a floor pivot. What's ES doing? If ES is rejecting a floor pivot, then chances are we're going to move up. A rising tide lifts all boats. Okay? All right, diagonal trend line break calls for a short. Here we go. So using options, probably the better way to do it is experimenting with weekly options. Okay? Now, let me just go to, I want to go to Netflix. And if you're going to trade stocks intraday, you avoid stocks like General Electric. You got to have something that's moving. Got to be moving, man. Okay, so here we are at 10 o'clock move, right? Down we go. So this is 11:30 right here, 11:30. This is, well, the bar printed at 11:38 when it finished. So this started the down move. So that's 11:30. And we're going down here. What else happened? Well, we broke through floor pivot, came up, 30-40 MA, floor pivot, retest. ES says we're going down. By golly, we're going down. Where are we going? Well, initially the floor pivot. How do I know? Because that's what this thing does. Now let me just this is 5 minutes. Here's how I would trade this chart. Hang on. Oh, come here. Custom. Range. Oh, I can't do that. I meant to go to 1 minute. I use another platform on my option trading. This is a 1 minute, so 1 minute is pretty good on a momentum stock, okay? All right, here we are. Now these lines make sense. Diagonal trend line break, go short. Reject of the floor pivot, all right? Diagonal trend line break. We just touched 34 we made. Downtrend is strong. Go short. And on it goes. Last chart. Last chart. Google. You know how I got into options? Well, I was watching the stock room, and I asked for some advice, because I bought Google stock back in when it was 300, and I wanted to know how to manage it with the options, and not a soul could tell me. So it looked like I had to learn options, and now I prefer using options. The floor pivots work. That's all I can tell you. This is Google, R2, R1. Where did we finish up? Well, here's afternoon, about 12 something. Main floor pivot. Just a second. Okay. And of course, you've got all these different signals. So if you decide to try learning this, only take a few stocks, okay? Only take a few, just maybe 2, and just practice. Just practice. On that Netflix, buying an option, I think at 8:55. Let me get that back up. Okay, on Netflix, this morning, I priced out the 185 option, right? And from 185 to 180, it went to hit 180. That's $5. So if you buy an at-the-money put, you're going to make 50 cents for every dollar that the stock drops. So, you know, you buy a put, boom, you made at least $250, one contract. And there's thousands of contracts traded. It's very, very liquid. Lots of people trading those weekly options on intraday trading. All right, I've covered a lot of ground, probably too much. I'm probably overwhelming, or either I'm oversimplifying. So I'm going to open this up for questions.
Okay, thanks, Martin. And I'm going to go back in time, 45 minutes. Wooder is making a comment that the CCI lines that you were drawing were all divergences.
Okay.
John Van Toon says that using CCI is similar to using a moving average on your chart. Javier wants to know, how do you decide whether you draw up or down trend lines?
All right, let me just address that real quick, Mike. Let's see here. Here's the rule. I want to start drawing at 150 or minus 150. And this is just an arbitrary rule that I create for teaching, because the follow-through seems to be much greater than if I were to draw it from 100. So the more people get to working with this, and it will take some time. If they want to draw from 100, that's fine. But and for my own trading, I prefer 150. So I start at 150. The only requirement is I want the CCI to touch it at least once. Right? So I draw the line, there's my touch, and I extend it down. If this is broken, I'm looking for a long. I talk about holistic trading. That means I'm looking at a lot of different things. So here we've got this 34 exponential moving average. Again, if you want to use a 20 or you want to use a simple moving average, I don't care. Whatever speaks to you. For me, this speaks to me. So I see this is going on. I visually see strong trend. Right? And boy, I like drawing these lines, pullback lines, because gosh, it was up, pull back. That's what they do, ebb and flow. And so this is the entry period. Okay. So to answer the question, draw it from at least 150, touch, okay, and then extend it down. Over here, if I was drawing up, it would be something like well, that's terrible. Hold on. I can't really freehand this thing. I don't really have a bump, so I just run alongside of it, and this is a sell signal, right? Because we start going down again and break it. So, you know, this by the time you get out, this would probably be your bar to get in. And of course, one thing we know, and one thing that is kind of like the cardinal rule, when you have a long-term trend line, we expect these things to hold. So this is an example of where we probably would ignore this trade because we really are looking for a reason to go long here, just like up here. We're not looking for this thing to really shoot up. History teaches us, gosh, when we hit this, chances are we're going to drop. That's what happened. This is why in the ES, because we're in all this resistance area on the charts, it was a great time to add a hedge trade, because trend and momentum said stay long, but we know what happens at resistance. So what we decided to do was trade the VIX. Okay, diagonal trend line break, long, and of course, where did we go? Whoops, we went up here to close to the 30-40. The R3 touched stopped the move here. But the bottom line is, anytime that you are at resistance, okay, anytime you're at resistance, you should expect that price is likely going to drop back. And we were at resistance at ES, and what happened? We're dropping back. We're consolidated, right? Tomorrow's Federal Reserve decision is probably going to help give a relief rally. All right. I hope that answered the question.
Okay.
Here's another a good example here. One sec. All right. All right. So diagonal trend line break, boom, down we go. Diagonal trend line break. Well, I can't draw, but I would want to touch this guy right here. And then, you know, I'm touching the 34 EMA. Okay. Down we go. Okay. Now, what happens if you get in a short and then all of a sudden we see it go up? Well, I like using this as a protective stop, but I will probably have it a little bit above here, all right? A little bit above. Might have got taken out on this if we were in this. But this is exactly how we manage a trade in wheat, just using the 34 EMA as our protective stop.
Okay.
Okay.
I see.
See how beautiful this works? See how beautiful that works? So we got in over here, and then we had to stop just above here, and we rode this thing all the way down. Well, here's divergence. Okay. Low, higher low, and price going down. That's divergence. So boom, we got out around here. And the real reason we got out was because, you know, we had I only trade four patterns, and one of them is this horizontal trend line. And so this told us, hey, you know, you've had a good run. This is about $4,000. Get out. All right. I'm sorry to interrupt. Go ahead, Mike.
Sure. I see a lot of people asking about the floor pivots. So I think it's safe to assume that every major platform has floor pivots available. If you're running NinjaTrader, like most people on BMT, Fat Tails, everybody knows him on BMT, has his package called Session Pivots that has all the options you could possibly want for all kinds of different pivots, floor pivots, Jackson zones, Fibonacci pivots, Camarilla pivots, and all that kind of stuff.
Right, and let me just remind you that there are so many pivots out there, because I think it's great if you can have something named after you. And so I just tend to say, you know, the floor pivots, the basic floor pivots, and I put, for day trading, I put them on the electronic hours. But you know, the floor pivots, the basic floor pivots, they work just great. And I'm so concerned that new traders, Mike, are overwhelmed and they just don't know because there's so many choices. So just keep it simple. The floor pivots do a great job.
Okay. Satine says, isn't the CCI a lagging indicator? It only looks good after the event. Any comment?
Ooh. You are talking to a disciple of the CCI. Again, I refer back to not me, but I refer back to a guy who's a noted expert, this guy John Murphy, okay? So he only spends about a page in the book, but for him to write this, notice that the CCI turns before prices at each top and bottom. This carries weight, all right? So I invite the trader to just test it out, and you'll see that it does actually help. It does, if not lead price, it's going to be right with price.
Now,
having said that, all oscillators in a moving market, all oscillators work. Go ahead.
The slide that you have up right now, and this goes in line with a few of the people asking, all those lines drawn on the CCI panel, those are all divergences. So do you look for divergent setups, or does that not matter to you?
It doesn't matter to me. I mean, I've traded divergence in the past, but the simplest thing for me to do is look for the diagonal trend line breaks. So let me just show you something real quick here. Okay. Diagonal trend line break. Up we go. I wouldn't draw it from here. Of course, and I like the 150 area. But if I had something like that, diagonal trend line break. Up we go. You know, that's. I think it's simpler just to do that kind of a thing.
Okay.
If you want to look at divergence, and I know divergence speaks to a lot of people, great.
Felix is asking if CCI works on Renko charts. Is there any time frame or any style of chart that you would say it does not work?
It works on everything. If I put up a chart and I made each price bar 10 days of action, CCI is going to work. If I put up a chart of 1 minute, if I put it, I mean, it's always going to work. Now, here's what you have to watch out for, okay? It's a great question, by the way. 1 second. Where is it? Let me get my, okay. Let's just look at this ES. The way that you determine the best time frame for the CCI is you look for which time frame gives you the best patterns. What you do not want is a bunch of really, really tight, just really tight action. So let me just look here. This is a 1 minute chart. Let's see what this looks like. What's going to happen is you're going to get a lot of false signals, okay? So you just want to say, well, okay, got diagonal trend line break, but gosh, we really didn't go anywhere. Maybe I need to check a different time frame. You know, let me widen this for you. Whoops. If you see that you have lots of just busy, then just experiment and just say, well, you know, I find that instead of the 1 minute, maybe I want to go to the, well, I'll tell you what I used to use. I used to use volume charts. So if we go to volume chart, boy, isn't that sweet. Okay, so all this does is it allows me to say, okay, well, here's diagonal trend line break here. And so I break this, and boom, up we go. So it's going to be one of those deals where first I suggest you use, you know, what I'm using on the, if you don't have range bars, try the 512 tick. If you're using these other type of price bars, then just experiment with the time frames, and all you want is clear signals. That's what you're looking for, just clear signals. So here's a diagonal trend line break, here's that failure swing, and up we go. Where are we going? Okay? Next question.
Ben is asking, it looks like, yeah. Ben is asking, it looks like you're picking different anchors for your swing points to draw your trend lines. Can you go through a few of them and isolate each swing point on the CCI and why you did or did not choose to anchor the trend line at that point?
Okay, well, first off, that's a good question. The first thing I would do is, you know, always we're looking at the 150 as a starting point. And when we're this close, for example, on this chart right here, you know, it's 11,000 volume chart, not 10 range. On this one, so you're going to be drawing it something like this, okay? Boy, I tell you. And here was an up move. Well, you know, we had our trend line drawn, so we really couldn't expect that we were going to necessarily break that. And we see that the moving average was down, so got to be careful of that. But here's how I would do this line, okay? Draw it down here, touch that area, bring it down here, okay? And then here's our move was where? To the moving average and the trend line. Sometimes you have to move these things around, so let's look at this one. So the initial line would be like this, okay? And then you see that the CCI fell back down, so you move that line over, okay? You move that line over, okay? And if you are looking at this not simply just the CCI, you're saying, well, gosh, okay, I broke up here, tested, and looks like I'm starting a new trend. So you see that when we break the diagonal trend line, we're also breaking, we're testing the moving average and moving up. So I really like to trade this all in conjunction. But initially, I would have drawn it down here first, saw that it went against me. You know, if I entered a trade based on that, that was a losing trade. Plain and simple. And then you move it over, and then boom, here's the trade, right? So you had a pullback line here. It looked good. You took the trade, boom, it hit you. And the next one worked out and covered your loss, of course. Next question.
David wants to know if he's asking about the euro, but you could expand this to say, are there different anchor points for different markets?
Define anchor points.
Like, I think that you're saying like the 150, for example, you find significance. Would you say that that's unilaterally the same no matter what product you're trading?
Absolutely, absolutely, absolutely.
Okay.
And what I would also say is that the more you get to using this, and then especially if you are like honed in on a single market, then you start saying, you know, you make the trader judgment if you're going to start drawing it from some other place. But initially, I find the best follow-through is from 150 or higher, or minus 150, you know, lower, you know, like minus 200. When we break a line from that 150 area, we seem to have better follow-through.
Okay. David also asking on floor pivots, are you using the cash or electronic 24-hour session?
Great question. I'm using I'm using the electronic session.
Okay. John wants to know if you're watching the CME future, the Euro future 6E. I think you already went over that, right?
Yes, I am watching that. I consider that the anchor. Now, you know, here I say that's the anchor, but you're going to see like an occasional decoupling, okay, a decoupling. But more often than not, it's the anchor. So if you looked at the daily chart, you're going to see the Euro's been going down and the ES has been staying up there. But intraday, they really tend to follow each other, if that makes sense, okay? Intraday, they really seem to follow each other. Now, the European trading stops at 11 o'clock Eastern Standard. So up until 11 o'clock, I think the Euro really is calling the shots. And then that volume kind of, you know, those people go home and all over in Europe. So then the ES has a chance to outshine and do its own thing. But as you can see, what time is this right here? This is 15:14. And this is 15:16, right? You see how, okay? And a lot of this is strictly the program trading. Now, let me just tell you what I mean by that. The idea of algorithmic trading is you find a market, and then you test your system. And if it's great, robust, you love it, then you put it on another market. And wow, it works great there. And eventually, you're putting this on so many markets, and you're executing the same buys and sells, same type of signals. This is why these markets are moving the way they do in such harmony, even seemingly uncorrelated instruments. Okay.
Lewis is asking if you also use mid pivots or if you only use the whole pivot.
I just use the whole. I don't even know what a mid pivot is. I just use the
just
floor
like
pivot.
Halfway between the pivot point and the R1, or halfway between R1 and R2.
No, the only thing I'll do is I'll use the floor pivot. I'll use the 34 MA, and you can see where I wanted price to break this morning. So, you know, if I see price starting to move up again, I'm going to assume, well, we're just going to go and retest the overnight highs. But that's all I use. I don't use the mid pivots. Good question.
We have a question from Ma. I hope I pronounced that right. He says that this is sort of like the prior question from David, I think it was, asking about the origin of where you're initiating the trend line. There seems to be several trend lines from the same origin. Which one do you trade? So I think it comes down again to the discretion of drawing the trend line. People are looking for more concrete, well-defined type of a methodology.
Okay, sure. Again, I want to stress that I'm looking at price, but the very first line I can touch here, and I extend it down. Right, this is the very first line here. All right. So if you're looking for a rule, I'm drawing from 150, and I just want to be able to touch. Right. So let me get my red bouncing ball. So I draw this thing down, and I'm touching here. Right. Here's the diagonal trend line break. Well, gosh, the trend is pretty strong down. But still, if I wanted to take a counter trend trade, then this is it. And it's short-lived. But this is the first one. All right? And then all of a sudden, I can draw this guy, right? Whoops. Come on, cooperate. Well, I meant to touch this guy. Something like that. I can't seem to draw this guy. I want to touch this. All right? So now this is a trend trade, diagonal trend line break with the trend, because the trend is down, right? Now, if this is your trigger bar, right, this is your entry bar, this guy. But you have to move these things around, okay? I wish I could be more definitive on that, but you know, the first opportunity you draw it, okay? And then when you see that hey, we're in a big downtrend, and now I got this diagonal trend line break, I better be out of the trade.
All right.
It's a trend trade.
Rhino's asking he's asking if this is true or not. Under 1 day, you use a 14-period CCI, and over 1 day is 20. Is that right?
Not exactly. If it's 60 minutes or higher, use a 20. If it is below 60 minutes, use a 14.
Okay. AZ's asking, well, I think we've covered it at this point. He's just asking you about the anchor points they get on the CCI.
I know, and you know, I have a lot of, that's really a big question always, is how to draw these trend lines. And I'm just going to have to leave it with everyone that you're going to have to experiment and just know that we're starting at 150. We like to get a bump in here, right? So let me see if I can do that on this. I want you to just experiment with this. Let me draw this line right here. Okay? So the very first one would probably be like this. And it was 34 EMA reject going back up here, right? Then diagonal trend line break here, called for that long there. And when you see this has been hit repeatedly, don't have any expectations we're going to break that yet. It may or it may not. The day trader has to be aware of these things. Or you do what I do and you let price resolve the issue. But you're just going to have to experiment with how these lines are drawn. And the rule is I want to start at 150 or minus 150. I want at least one touch, and I extend it out. And then sometimes, you know, I have to move the line.
Okay.
Just like that.
Alan wants to know if you look at volume at all as part of your trading.
No. I used to trade volume charts, but I do not look at volume. And, you know, someone one time tried to explain the market profile, and my God, that's like I need a degree to trade that. So
that's funny. I personally trade volume profile. It's just, so, you know, it's different for everybody. It's whatever speaks to you.
Whatever speaks to you. I'm a really simple type of a thinker here.
All right, Gigi asking, regarding the trend for the day, how do you determine the outlook trend for the entire day? For example, do you try to get the bias the night before, Are you doing it based on the open? Do you look at maybe an opening range or anything like that? Does it matter?
Well, that brings up a very good point here. Hang on. Okay. I send out a morning email to my clients, and we talk about where's the market going to go. And I look at, well, what happened in the overnight, right? I suggest that people, I mean, for 2 weeks, why not? Look at it. You'll also know whatever other stuff that we look at. Otherwise, when we're trying to determine trend, we're looking at the weekly. Once a week, if I can get this thing. We're looking at the weekly. Now see, we've got a potential signal here that we're going to have a reversal. What is this? This is the wheat market. Diagonal trend line break. Well, the weekly is like your big picture view. That's all this is. And we're primarily looking to see how low is low, how high is high, because our tactical entries are going to be based on the daily chart. And of course, if we ever break a diagonal, a price trend line on a weekly chart, that's a huge deal. So if I'm day trading, I'm going to first look at, let me get the ES up here. Okay. I'm going to first look and see how the market's trading, and all this kind of business right here, this is terrible, isn't it? This is really tough. So is there something else to trade? Finally, we break out, and when I see that we've come down to test this 34 MA, and we're moving back up, this tells me through experience, hey, chances are we're going to get some range days in here and move up, retest highs at minimum. And this line tells me where I've got the pink triangle thing or rectangle. This is our target up here. This has been our long-standing target, this area. Okay, so to determine your intraday, you're gonna be looking at the daily chart, and if you have a CCI signal, you know, you're like this one right here, diagonal trendline break. This kind of helps you figure out where we're going to go, okay? One of the things we'd been talking about last week was how we were looking for this to go down and then pop up, because that's what this thing typically does. And we were not seeing it. The CCI kept going down. And so we were thinking, well, you know, hello, any day now we might be popping up here, because trend and momentum were strong. And the CCI kept chugging down. Well, what this represents is weakening momentum, okay? All right. I don't know if that answered the question or not.
Okay. Let's see. Brad is asking if you can elaborate on your stops. Are they based on potential to the next pivot level, pivot point? Are they behind the previous bar, swing low, swing high? Is it a set tick amount, etc.?
Okay. Look, these are tomorrow's pivots already made for us. Okay. Let's see here. Let's say that we're going to take this diagonal trendline break, this one right here. So we get this diagonal trendline break. Let me just see what the so this is our trigger bar right here. So that means the entry bar is this guy. So my stop should be here. What else? Well, okay, we had another one. So if you did not get in at that trade, not to worry. All right, so we have another diagonal trendline break. I don't have it drawn here, but we draw it up like that. So now this is our trigger bar, and our entry bar is this guy, our stop is here, right? At the high of the trigger bar. And you can see if you got in over on this first one, you were not knocked out. This is one of the most hardest things for traders to really master, I believe. The simple initial placement. It's tough. So you just got to practice. If you get a trigger bar, then this is your entry. Your stop is the high, or if you can, just a tad bit above the high. And then if the trade starts working in your direction, then you can later move your stop to break even plus a tick or something like that. But that's typically where I will place my stop.
Okay.
Now, let's talk about an exit. I want to get another arrow here. Anytime the CCI crosses, if we bend down and we cross the 150, this is your first shot across the bow. This is saying, hey, wake up. And then you say, uh-oh, my first early warning notice here. And then, if we cross the 100, well, then maybe you ought to get out of the trade, right? Get out of the trade. So, let me draw another line here. Here's that failure swing thing I'm talking about. So as you get used to this and you look and say, my goodness, ooh, this is a classic pattern here. And if you rode this thing down, your first early warning, first shot across the bow is 150. And if it keeps going up, you want to exit at the 100 line, okay? So let's just say you got into this trade here. You would if you were in Europe. This is 4 o'clock in the morning, or if you're an insomniac. So you're in this trade, and we start coming down, right? We cross the 100. Well, that's like an early, I mean, this is an exit. Crossing the 100 is an exit, because you don't know it's going to go higher. All you know is that we came up to 34 EMA, and we expect this thing to probably continue. Look at that strong downtrend. So you take your profit. And if the thing keeps going up, you don't kick yourself. You had a good trade if you got in. All right. Let's look at another one real quick. All right. Let's see if I can do that. Nope. Come on. So diagonal trend line break. We come down. So my stop, let me get this exact. I lost my thing, didn't I? I think it was around right here. Okay. Here's a great example. My stop is right here. And look at how this one would have knocked you out, right? Absolutely. So that's why I like to say if you can put maybe a few ticks above it. All right, I can draw another line over here for you. And I want to stress you've got to practice, okay? All right, so there's the diagonal trend line break. Coming down, you know, you enter and immediately, boom, they take it against you. If you got out, you got out, you know. You got another diagonal trend line break here to go short. You come down here to the 100 and you turn up. This tells you the down move is weakening. it's telling you, well, you know, if it's not strong enough to even hit 100, I need to get out. What else? Well, if you learn the moving average, you expected to go to moving average. All of this ties together. And you know, you may find out if you use this 20, it might have been exactly hitting the 20. I just used the 34. Next question.
Okay, Mike is asking, what about when the weekly or monthly pivots are, I guess he says when they come into play. I guess he's wanting to know if you look at the weekly or monthlies at all and factor them into your decision.
I do not look at the monthly pivots, no. You know, it's one of those deals. If it sees you hit it, you go, oh, look at that. But I think that the monthly is just good for your extreme big picture. It's like you're in an airplane at 35,000 feet, right? And you're looking out the window and you're looking at a map, right? All this does is tell you the general direction of the flow on the monthly. On the weekly, here's the floor pivots here. For tactical entry, no. And for exits, not really. I prefer the daily chart for that. What the weekly does is I do respect the CCI signals. More importantly, I respect the price trend lines. And as you can see on this chart, we are in an ascending wedge. And these things typically resolve to the downside 65% of the time, right? So we've come up, broke out, and now it looks like we're trying to fall back. If we fall back in here, then I know more often than not, if we fall back, gosh, we're going to go all the way down here. What's this? Well, it's a line that price is attracted to. All right, 1462. And here's when we hit this so much I had to put it in gold. 1388. And you see this is an intersection of the channel line. So this is like a huge magnet attracting price. If we break down back in here, and I'm expecting this will happen in May, if we break back down in here, I think we're going to go all the way back down here. Why May? Because that's seasonally when these things tend to occur. We tend to see a pullback in May. Next question.
Okay, actually, since we're at the 2-hour mark, I think that's a pretty good point to go ahead and stop. Did you have anything else you want to show us? And can you also give some contact information for anybody that did not get their question answered so they can email you or etc.?
Absolutely. First, let me just briefly tell you, I moved this newsletter to video. So I do a video Monday through Thursday, and I call trades in advance. And we put the trades on, and we see what happens. We watch them unfold. This is the only way you're going to learn. And you got to understand, my being in front of you Monday through Thursday is reinforcement. On the weekend, I do 2 videos. We look at daily and weekly action, and then the next video we look at our positions and think about any new trades. I started a morning email where I just give everybody the ES pivots and the Euro pivots, and I talk about if anything happened overnight, you know, anything of merit. And so what this means is, as a coach, I'm in front of you 6 times a week. That's a lot, but that's the only way you're going to learn. I do a once-a-month publication, long-term trading report stocks, 2-year holding period or more, okay? Futures, we did a trade last July in soybeans, and we got out of it like in October. So these are very long-term deals. Then I do a total immersion boot camp about 3 times a year, okay? And I record it, and I do have recordings available. If you want to contact me, my email is martin@hitthemarktrading.com, and I think you should ask to get a trial for 2 weeks of this morning email if you want to just get used to, what I look at. It might help you, maybe it won't. The other thing is, as of January, I entered the realm of social marketing, and I opened up a Facebook page for Hit the Mark Trading. So if you're in Facebook, you might just check it out. Beyond that, Mike, I want to thank you personally for allowing me to speak with your group. I appreciate Mirror's Futures and Bob tremendously that they asked me to be here on their behalf and sponsored the talk. I really appreciate that. That's about it for me.
Okay. Thank you very much, Martin, for your time today in the presentation and answering everybody's questions. So if anybody did not get their question answered, then right there's the email address. You can email Martin or check out his website. And like Martin just mentioned, I want to thank Mirror's Futures for sponsoring this event today. I will be posting the recording of this webinar on BMT sometime tomorrow. I will also send the links to Martin so he can send it out to his followers if he wants. All right, guys, thanks again, and I'll see everybody on the forum.
Thank you, Mike.